So today we'll talk about Fiverr stock. I bought some Fiverr shares yesterday on Monday. And today I want to explain why this stock is cheap in my opinion, right? So let's start talking about it, right? So here on my screen you can actually see MineHub stock. I'm also long here, but today's subject is Fiverr. So as I already told you, I bought some shares yesterday at around $19-20. Okay, so that means that my average position is around here. Okay, I don't know the exact price, I don't know the exact number. However, I know that my average position is around this region here. And Fiverr, as you can see here, has dropped like 93% since its peak, since its historical peak in 2021. However, that doesn't scare me. I actually like stocks that have gone down a lot, like Fiverr. But anyway, why do I believe Fiverr stock is cheap? Well, for that, let's come here to Seeking Alpha, and I left a link to this platform with a discount, okay, in this video's description. So let's come here to this page. So why do I believe Fiverr is cheap? Well, let's start with this. So we are talking about a company with a market cap of $737 million. This company, however, as we can see here, has a net cash position of $287 million. They have a negative net debt, as you can see here. What does that mean? This means that this company has much more cash than debt on its balance sheet. And well, that's a good sign, of course. But if this company has a market cap of 737 while holding 288 million on its balance sheet in net cash, that means that Fiverr's enterprise value stands at roughly $450 million. So in the end, you are basically paying $450 million for this company. Okay, but what are you taking home? What are you buying exactly? So you are buying a company that is showing $427 million in revenue. Okay, so that means that this company is trading at an enterprise value to sales multiple of only 1.05 times, right? So we are talking about a multiple of roughly 1 times enterprise value to sales. And I think that's an incredibly low multiple for this stock, for this company. Now, why do I say that? Well, first, because I really like this business model. So we are talking here about a company that has a very asset-light business model. In case you don't know Fiverr, Fiverr is a technology company. They are pretty much a marketplace of freelancers. So let's say you want to hire someone, let's say you are a musician and that you want to hire someone to mix and to master your song. Okay? So you can go to Fiverr and there you will have hundreds, thousands of people offering their services. So you can hire someone to do that through Fiverr. So that's pretty much what Fiverr does. And what I like in this business is that first, it is a very asset-light business model. You need to build a platform. However, once it is ready, it can serve 100 people, but it can also serve 100,000 people. Okay, that's the advantage of technology business. In other words, this is a very scalable business model, okay? And it also has a network effect. And I'm always searching for companies with a network effect. But besides having a good business model, what else can Fiverr offer? Well, Fiverr is also showing an incredible gross margin. So as you can see here, Fiverr is showing a gross margin of 81%. That's something we don't see every day, okay? That's an excellent gross margin. Moving on, Fiverr is also showing operating profits. Fiverr currently has an operating margin of 1.5%. And lastly, Fiverr is also showing net profits. Now, why is Fiverr's net profit margin higher than its operating margin? Well, because as we've seen, Fiverr has much more cash than debt on its balance sheet. So they are actually making money with interest. So that adds up to their results. Okay, so that's why they're showing net profits. So you are paying a multiple of only 1 times enterprise value to sales for a company with an excellent business model, for a company that is already profitable, with more cash than debt on its balance sheet, with no liquidity problems at all. And ultimately, this company is also generating a ton of cash. So honestly, I don't think Fiverr deserves a multiple of only 1 times enterprise value to sales, you know? But as I was saying, Fiverr is generating a lot of cash. As we can see here, Fiverr has delivered $113 million in cash from operations over the last 12 months. So if Fiverr is making $420 million in revenue, and if this company is delivering $113 in operating cash flow, that means that Fiverr's operating cash flow margin stands at 27%. 27%. That's also something we don't see every day, okay? That's an amazing cash margin. So that's pretty much why I decided to go long here, because we have a perfectly fine business here, very good business model, excellent margins, already profitable, no debt, and we also have a business that is generating a ton of cash. So that's why I decided to just go ahead and buy some more shares, adding to my position, right? And that's pretty much all I wanted to bring in this video, all I wanted to cover in this video. I wanted to let you guys know that I bought more Fiverr shares, and I wanted to highlight that this stock is very, very cheap, honestly. I mean, I can easily see Fiverr trading at a multiple of 5-10 times enterprise value to sales, really. So I wouldn't be surprised to see a multi-bagger here, okay? Anyway, that's it for today, and see you next time.